Jim, thanks very much for being with me. Now, so many indicators that China's economy is slowing down, but just how steeply?
Well, I think it's pretty steep, Tara. The main indicators that we see can be quite easily manipulated. So things like industrial production, GDP, etc. GDP, of course, not slowing down that much at the moment. But when we hear the anecdotes that are coming from industry in China, then you're hearing about year-on-year declines in activity, year-on-year declines in orders. And certainly when you get to the property sector, there's falling prices and falling activity there. So at the moment, we're still on a number in our mind of 5 to 6% GDP growth, but no more than that, and going down next year.
Now, you're talking about the numbers, but overall, what's going to be the impact on China as these numbers do go down? What do you see in the next year?
Well, the interesting thing is going to be how the labour market reacts, because that's going to be the real determining factor behind government policy. And so far, as the industrial economy has declined, and it is in decline, the services economy is actually doing quite well. So that's keeping employment buoyant. And while that's the case, the government can continue to put pressure on things like property and overcapacity in the SOEs. So the resource-intensive period of Chinese growth is gone. We've now got a services sector economy instead, and that's at least keeping things relatively calm in the labour market.
Okay, relatively calm. Some people worry that if there are changes there as well, we're going to start to see some sort of social problems and the government coming in as well to try and quell that. Is that a little bit too alarmist an idea?
I think it is, because usually when an economy slows down, it slows down right across the economy. And when that happens, people are actually saying, oh dear, other people are losing their jobs and I've lost my job, what can I do to find another one? They're not really talking about, I must get out into the streets and riot about the fact I've lost my job. So I think this whole notion of social unrest is actually misplaced when it comes to a recession. And that's possibly what we're heading into. Okay,
so if we're heading into a recession in China, what do you think that's actually going to translate into? A totally different kind of economy, or just a short period which weaker China will affect other economies around the world?
Well, I think the weaker China is affecting other economies already, especially in terms of commodity demand, and we're seeing that in the price of all sorts of commodities. But no, I think we're in a China in transition, because in my view, urbanisation has just about run its course. We've got far too much supply of property, there's far too much supply of capital goods industries, but there's too little supply of services. And that's really what's coming out just now, and I think that's going to be the transformative nature of this slowdown. We're going to see a much bigger service economy in China, more consumer orientated.
Well, that should be good in the long run, right?
I would say so, and really when you look at services across the world, that's where the value added is created. It's much more value added accretion than if you're looking at manufacturing industry or resource industries. So this is a good transformation for China, but it means that we don't get those heady numbers of GDP growth at 10% anymore.
So here you are, the optimist today, and I'm like the doom and gloom interviewer. I was going to bring in the sort of political aspect of things. We know that the newish administration and Xi Jinping, there is really this kind of clampdown on power, on corruption, etc. Is that going to have an impact on the economy?
Oh, and yes, it will have an impact on the economy, and I think it's already happening. When you crack down on corruption, it really stops bureaucrats and local government officials and other officials from making decisions, because they're worried that they're going to get caught up in a corruption scandal. So there's a slowdown already in putting contracts out for order. There's also a slowdown in the interaction between the private sector and the public sector, because the private sector doesn't want to get caught up in any dodgy business anymore. And of course there's a huge slowdown in the spending power of the people in power. That's a good thing, although it's pretty bad for Hong Kong and Macau.
So overall, with all these crosswinds, a final note, paint me a little picture of how you see China's economy developing now in the next few months.
Over the next few months, I think we'll get more headline negative numbers coming out of the economy. And the disappointment for most analysts will be that the government's not going to do very much about it. It's not going to stimulate in the way that they're hoping. It's certainly not going to release another huge wave of credit, because that's the source of all the problems in the first place. And I don't think there's going to be much fiscal spending either. But I would be on the lookout for an economy with a weakening currency. I think that's next in store.